Welcome back to our Semiconductor Quarterly call. Over the past few calls, we've really tried to put together a mental map of how this AI is reshaping the semiconductor industry as a whole, not just reacting to trends, but trying to understand exactly how the industry is realigning with all of these updates and how this AI industry is making an impact on semiconductors. So in our first webinar, we were trying to hone in and argue that Nvidia's major upgrade cycle is likely behind us, right? And creating a broader opportunity set within the semiconductor industry, specifically in the fabless space, which is why we launched SMHX. We thought that there was a specific subset of opportunity with the designers to capture this shift. Fast forward to the next webinar, we really saw early confirmation of this thesis. We saw the ASIC chip designers such as Broadcom, their numbers really reinforce this diversification theme that we were pushing. SMHX started to reflect that when you looked at the underlying holdings and what was happening within the industry. So fast forward again, now we're here the next quarter where we're at today, and trying to understand what has happened over the last 3 months. AI model development is moving extremely fast, right? Faster than maybe some people would have even expected. Monetization strategies are evolving rapidly. AI models are becoming more specialized. It's really changing the compute landscape, which is a lot of the narrative that we'll talk about today, right? Compute versus optimization. And then the conversation isn't just about GPUs anymore. AI compute is shifting what these companies are building, the markets that they're developing. It's not just chips anymore. We're actually building entire markets within the AI industry and how that reflects into semiconductors. And then hyperscalers restructuring their AI infrastructure to optimize for their own needs, not just the industry as a whole, right? So not necessarily just buying off-the-shelf GPUs anymore. And then we're going to reevaluate NVIDIA's role in this environment. Obviously, they had earnings yesterday or on Wednesday, rather. So by the time this comes out, we'll be a day later, but large positions in Nvidia still exist. It remains dominant. We don't think that that's necessarily going to change, but the customer strategies are evolving, right? And I think that's the important part to really hone in on. And the real question, I guess, is, how does the AI model evolution impact the entire semiconductor ecosystem? And that's really what we're trying to understand and create a mental map around. So it's not just about predicting winners and losers. We're really trying to recognize the industry, how it's reflexive, and each shift in the AI model reshapes semiconductor demand and where we're at today. So I'll turn it over to Angus a little bit to kind of dive into that and start, but that's kind of what our goal is here today and when we do these quarterly update calls.
All right. Thank you, Nick. Welcome, everyone. All right. I'm going to try and give my introduction tonally, right? Because let's say the last two of these were a bit of a grind, right? There was a bit of risk around it. I could not have imagined 3 months, maybe even 6 months ago, we would be where we are right now. I am pumped, right? And I think what we're going to try and do here, and hopefully you can stick through this whole podcast, is we're going to try and address some of the myths and the fears, because I think when investors come at this specific space, which is moving at warp speed, they think about what has changed and then map that over what they already know. And that is flat out wrong, right? And that just gets you to the wrong place. So when we think about how we adjust our thesis and our mind map with incoming data, we're looking out reflexively, what changes. So if I drove to work today and the wheel fell off my car, everything changes in the future, right? And this is how we're trying to think about it. I think that point one, my only other point is that there's going to be a couple of words that come up a lot here, and that is intentional, right? One word is incentives, right? Incentives are becoming very, very clear. And when people thought that this was some kind of bulge of CapEx, no, this thing is ramping. It's ramping at logarithmic speed, like 2x. I mean, it's insanity. And I think the other thing that I just want to correct on the inside before I say my other big point is, or big buzzword is, I think people think there's going to be some winner, right? Some ultimate one winner in this. Like we're looking for the perfect set of steak knives or the AI model to rule them all. That's not happening, right? This thing has gone viral within enterprises, within economies. This thing is moving way faster, right? And that is not disruptive and people losing their jobs. It's profitability and companies that are facing white space we never even thought existed. So when Nick and I started talking, or Nick started talking about SMHX, it was because we thought the white space moment was drawing to a close for Nvidia. We did not expect what we're now seeing.
we didn't know what we didn't know, right? Probably. And I think that's probably the case across the board as people are evaluating space. And I think that's important. Trying to understand, like applying a rearward looking model to what is happening now is just not, it's not the right way to look at it, right?
But I think just sort of quickly on that, just like we sort of, I don't want to say we got it right, or to a large extent, our mental model, right? Our mind map and our thesis has played out pretty much exactly as we thought it was. The events have moved much quicker.
Sure. Yes. Time scale.
But if you have a mind
different.
map, right, and this is what we're hoping to leave people with today is a map, a roadmap as far as we can see, right? Because if you have a map, you're much better positioned to manage incoming data and organize it into the compartment it's supposed to go in, and not panic and not sell and not buy and not do stuff based on fear or some kind of moment of euphoria.
Yeah, absolutely. I mean, and I think we've seen, so just in the last even couple weeks, there's been huge moves, right? So you have DeepSeek, you have XAI, Grok 3, both of which DeepSeek comes first, right? You see the market volatility that follows there, thinking that, you know, these hyperscalers are done spending because we can optimize much better for these models and that you don't need the GPU, you don't need the compute. And then a week and a half later, Grok 3 comes out and they show that, you know, compute scaling laws still work and they have been able to catch up to everybody in a much more compressed time frame based on, you know, Colossus and their data centers that they built. So I think it's crazy, right?
Look, I mean, it's funny. You emailed me a week or so ago with a bunch of bullet points that we'd probably talk about. My impulse would have been scratch off DeepSeek. Everyone's bored of that. But we've got something really kind of value added to say here, because I don't think anyone's looking at it in the right way. So here's how I'd lay that out and to sort of talk to the points that you raised, right? I think the fear and the piece that I sort of laid out before, mapping what's happening on what's happened on what you already know. I think everybody has over-indexed to the DeepSeek risk, right? Over-indexed the DeepSeek risk, right? With this sort of usual backward-looking perspective of markets. And that's made worse by fear and speed of AI. But I think I'm going to try to flip that, because the question really is, why were the US labs and the US hyperscalers not doing what DeepSeek were doing, right? If you think about it through that lens, right, you end up at a completely different place. So were they not doing it because they could not do it? Or were they not doing it because they were doing something else more valuable? The answer is the last, right? The limiting factor in China is access to GPUs. So they had what they had and they worked within that, right? So they were optimizing what they had. US hyperscalers have as many GPUs as they want. They can build clusters all day long. The limiting factors are power to some extent, some water cooling issues, some components, but they can do whatever the hell they want. So the reason why US hyperscalers were not as far advanced as China is because their incentives were not to be, right? So their incentives were to scale fast, build out, deploy, get access to these things when they weren't easy to get, because they were all running towards the same finish line at the same time. That has changed, and we're going to go into that because that is insanity as well. But I think, you know, the reality was over-indexed to DeepSeek and the fear. I think there's anything to worry about there. Under-indexed to Grok. Now, remembering that Grok didn't exist 12 months ago, and this 100,000 cluster in Memphis, Tennessee it was like an empty factory 18 or 19 months ago. This is insanity, right? And this is insanity because we have the capabilities in this country to not only implement, I mean, what Elon did was breathtaking, but also just access to the GPUs. DeepSeek is awesome. Minimize that. Somewhat suspicious how they got to some of the stuff. But I mean,
right.
I think that like the big point I want to really make early on here is you have to look at everything at the same time, right? You've got what happened to DeepSeek over there, and you've got what happened at XAI and Grok over there. Together, the real conclusion is this thing is barreling forward.
Yep. Yep. It's funny because you think they exist in silos and they don't, and they're moving together. And I think you've sent me this in an email, but it goes back to Warren Buffett's old quote is right. You show me the incentive and I'll show you the outcome. They had every incentive to be more efficient and do more with less to catch up. Right. And I think you continue to say this, but that's what China does.
But I think like to put a pin in that, to just simply say, look, what I want to leave you, or what we want to leave you guys with today, is the incentives have changed, right? The outcomes, the money, the profitability, the market share, it's exploding, and it's exploding in multiple dimensions.
So it doesn't mean that, compute spend is over, right? And that we don't need compute scaling anymore. I think it is saying that, no, you need both of them at the same time. They're both happening and coexisting at the same time.
Yeah, I mean, scaling, is it over? No way. I find actually probably the opposite, right? Probably what this means is you're going to see more of it. Like I said, DeepSeek is incredible engineering. There's no question. And it gave us a glimpse of what I have always been sort of thinking about in the back of my mind, this sort of liftoff moment where AI can train AI recursively, right? And that's sort of what DeepSeek gave us a look at. And sure, it taught US engineers a thing or two because they just weren't paying attention to some of those jobs just yet. But also it catalyzed a thing or two. So DeepSeek was kind of a wow because when you used it, it gave you chain of thought, right? So you asked it a question. It's super cute, right? Like your little AI companion is working it all out in front of you and you can be best friends, that kind of thing. Now, OpenAI were not doing that. Perplexity, Claude wasn't doing that, but that's probably for competition reasons, not because they couldn't. So I think there's a lot to unpack in this, and I'm not going to spend too long on it, but it's a really, I cannot emphasize more that I think the sum of those two events that happened in this quarter only catalyzed big change.
Got it. Okay. So if they're proving optimization has created more juice, essentially, where does that leave the traditional scaling strategies, right? Like where does that leave everything else?
I think in the natural order of things, because thing is accelerating at such speed, I think just DeepSeek solved a couple of problems that these guys, the rest of the crew in the US, were going to get to pretty soon. And I think they already were there. And one of the big points we'd laid up in our first of these podcasts was the rise of ASICs and other silicon solutions to AI, right? But still, right, to me, and I was very positive on this, the Broadcom numbers that dropped at the end of last year surprised me. They were insane. So the speed at which this thing was diversifying was even faster, right? So I think what you would say to the incentives and to the profitability factor is, if I'm any one of these AI businesses and I saw what just happened the last quarter, I would mark up the terminal value of the CapEx that I had already deployed by a factor of more than 2, right? This CapEx we have spent and we have put in the ground, I think it's now worth way more than anyone expected, because the problem we were like struggling with, I say less than 6 months ago, was how do they get the ROI? How do they monetize this? That's gone, right? So I think higher terminal value and ramps the incentive for more CapEx, right? And more CapEx, I think, goes back, you raised the SMHX point, like that's where the white space is, I think, right now, in those kind of businesses that can innovate around white space that is just created by what do we do next kind of stuff. And then, if they succeed, SMH, which is a lot of sort of semi-cap equipment, all of that stuff follows.
Like everyone, you saw DeepSeek come in and everyone just said, okay, well, that's spending's over, let's monetize. They've rapidly been able to monetize, but then, as you're saying, right, the CapEx is not coming down. They're still building out because the compute laws do still work. So now you've got optimization on top of the fact that, compute still needs to be there. There's still the argument for the hardware, right? And there's still the argument that this white space is not fully filled, that there is still so much opportunity out there for the rest of the design space, the rest of the broad semiconductor space, right? So SMH and SMHX and the players inside of them can all still continue to be winners, because this thing is evolving just so rapidly that to make an assertion, or an assumption rather, I guess, that okay, well, this is it for semiconductors. Now these hyperscalers are going to start monetizing these. It just isn't, that's just not how it's playing out. There's still so much white space to be filled. And we don't even really know, honestly, we can put together that, our mental model and our map of where we think this is headed and what we think. But at the end of the day, the sand is changing under everyone's feet so rapidly and things change so quickly that, there still needs to be hardware, whether that's through scaling or optimization, right? And I know you talked about a lot about this, and this was on the second call that we did, but the ASICs chips, right? And talking about that space, maybe just a quick one or two on how, that plays out, right? And the fact that, and I think that's largely what we're talking about within SMHX is just these alternatives to Nvidia. Nvidia wins the GPUs, they win the training, but there's so much more room there for others.
Yeah, I think you sort of take me back to the original conversation we had when around the sort of SMHX thing and the why and the how. And like, this is where we say this every call, right? We love Nvidia. We love Jensen. We love everybody in that organization. We think that is literally one of the greatest companies on earth. And the market cap tells you that, right? There's no question. But when we think about the balloon, right, that is white space in GPUs, when Nvidia has a monopoly, right? So that is an opportunity and a risk. The balloon can grow, right? But it can't grow anything like what we're seeing on the other side. And I think that was sort of the DeepSeek moment. It's like, this is what's possible, right? So, there's no question. Look, I got on the call yesterday for Nvidia, right? The numbers were decent. Looking back, it was big, but looking forward, they're not guiding anything sort of in the wow category, but it was low energy, right? It was low energy. And I put up on X, like, the biggest irony of the semiconductor world to date is that an AI could have done that call better than those guys because they just didn't seem to be excited about what was going on. And you can sort of understand that. They're doing tough stuff. They're doing difficult stuff. And the reason why they get monopoly margins is because nobody else really can do it. But it's being unbundled, right? So NVIDIA's being unbundled. When you first only could buy an NVIDIA GPU, we've now learned, and all of these guys have learned, that a lot of what they could do inside an NVIDIA GPU, they can do much cheaper with custom designed silicon. We saw Amazon ramp up their teams. We saw Google ramp up their teams. They now have their own custom ASICs, which are chips that will do mostly inference-related stuff much cheaper. So when I say unbundled, when you buy an NVIDIA server, you've got to buy everything inside, like 1 million components or 300 different vendors go in there. It's a complicated thing, but there's margin at every step, right? If you can unbundle that, it's kind of like saying going to Radio Shack and buying all the pieces when Radio Shack used to, but you'd get it much cheaper, right? So that's what's happening. And because each company now, and maybe we'll get onto it in a minute, has defined its lane, right? Again, this is something I hadn't even imagined would happen in the next 2 years. They have all now defined their lanes where they want to be. They can now design silicon outcomes that are built and designed for purpose. And because they can then build them at scale and they can take NVIDIA's 70% gross margins out of it, it's a lot cheaper.
Speaking about the hyperscalers and how they're monetizing and where they're moving and what that means for the semi space. But maybe if we take a step back and lead into that, ChatGPT has become essentially the household name, right? They are the consumer brand for AI right now. I guess it seems like a year ago or so, people would have maybe not thought that was going to be the case.
So this goes into this surprises, monetization, speed category. You don't even have time to think until things have already happened, right? So ChatGPT has, I believe it's 400 million active weekly users, 400 million active weekly users. Most of those are behind a paywall, right? And I know, I use other AIs, but that's the one on my phone. And I've gotten used to it and it's gotten used to me and I'm probably going to stick with it. It's not that expensive, but that is a consumer brand. So at their rush to get there or to backfill on that kind of demand, they've missed out on things. I'm surprised they don't have an ad layer in there right now. They could monetize an ad layer really easily and deploy that capital in making the whole thing better. But, it's moving so fast. So ChatGPT is a brand. I don't think that necessarily goes away. They're going to add in the chain of thought thing, or I think they already have. But this is what's happening. It's sort of what I talked about. Each one of these guys who's deployed the massive clusters of GPUs have found businesses that are not competing with the other businesses. That was the big fear at the beginning, was that who's going to win, right? this is my point. There is no winner, right?
Yeah.
They're all winning. And this is where the sort of investment piece, and we're not giving investment advice here, just atomizes, right? Because, if you take, I don't know, Meta, right? I think they've got like 165 billion of revenue. I think that their gross margins are like 20%. So call that 50 in cost of goods sold, and OpEx probably roughly the same. If you increase revenue because of AI by 5%, I'm just trying to do the math in my head, and then you reduce OpEx because they're not just like giving you AI, they're running on their own business and you can see in the last 10K is that they're already starting to cut people again and cut costs. So if you let's say jack up by 5 at the revenue line, let's say take OpEx down by 3, you're getting like 15% increase straight off the bat in EPS, right? That's sort of what's happening here. So this is a 3-dimensional game, right? And I don't think that's well understood.
Yeah, I think that's a great point, right? And we can continue to go down this hyperscalers lane and how they're monetizing, but I think maybe just to quickly pull that together, right? And maybe it seems like, why is this part of a semiconductor call? But like, I think that's the entire point, right? So ChatGPT has become this consumer brand. They are the forward facing for people and how they're interacting with AI on a day-to-day basis with their daily lives. And I think people maybe at some level, that's how far they go with it, right? And they don't take that next step and to really understand how these hyperscalers, they're not just building models so that you can have a great model to use on your phone, right? They are using it to monetize their business on the back end, right? And I think you have to really understand that. And then when you start to look at AI and how do you capture this investment thesis as a whole, we have said this from the beginning, the picks and shovels of semiconductors is really the best way to do that, right? Is that they're continuing to build these businesses. They're continuing to optimize their businesses with AI, and they will only continue to do that more if it means their revenues and their margins are going up, right? So at the end of the day, it's a trickle down effect for semiconductors because these are the building blocks to how this pivotal technology is coming to market, right?
This is about ROI monetization. Now, just let me sort of build this back out for you again, right? So these guys, we thought they were just going to burn capital, right? They didn't. This is way more than they thought. Then you throw in the piece that I sort of started with, which was if they've gotten to where like nobody thought they'd get to, but actually they've gotten 2 years ahead in like 3 months, they need more infrastructure, right? They're going to continue to deploy capital really, really aggressively. And that's why you're hearing these sort of 500 million from Microsoft, 200 million from Meta. These numbers are coming out thick and fast now. Again, I think most people out there think that this is a bulge. This is the minute DeepSeek hit, right? My Twitter feed my X feed just filled up with Cisco pictures. It's like, what the hell, right? This is not Cisco, right? Nvidia has slowed down, right? That's just a reality, and you're not going to see the wow numbers. But this is not the customer is not like WorldCom or it's just not, right. And I think that's again, this is what I think we're trying to lead people to. That this is you've got to exercise some imagination here, and you've got to sort of try and extrapolate a logarithmic chart, not a linear chart, because that's what this thing is. And so the incentives, this is the word I keep kind of banging on. The incentives lie with continued deployment of CapEx, and that just rolls straight into those two ETFs we're talking about.
Okay, so I mean, CapEx has been, like you said, the thing that most people have harped on and talked about, and being, a limiting factor and how much more can they do. Can you talk a little bit of how they're implementing this CapEx, what that means for monetization, and how we're actually starting to see that come to, right? So I know you talked about OpenAI, but maybe AWS, Azure, like these different ones that they are deploying this, what does that look like, right? And maybe making people understand how this monetization is already beginning to happen, and it is coming faster than we thought, and maybe other people thought, and how they're doing that.
Okay, so 2 weeks ago I was in India, right? I was charging around doing a bunch of stuff, but I met up with a few of the India outsourced technology guys, TCS, Infosys, those kind of guys, and they gave me an answer to a question that I didn't even ask, right? I thought about it as we were talking. So they're working on AI cloud, right? implementing for most of the large US corporations. So whether it's, they didn't say names, but it's Salesforce, it's Microsoft, it's those kind of guys. And I just thought to ask them, is there one common platform that is being used at an enterprise level? Azure. Everyone, Azure, right? So having thought, like, how does Azure and AWS and how do all these guys all sort of carve out their lanes? Let's line it up. You got ChatGPT, right? Like we said, 400 million active weekly users. That's a sort of retail layer. You've then got Azure, which is pretty obviously the enterprise layer. They got that buttoned down for various reasons. AWS, small, medium enterprises, very low cost, high speed, not a lot of functionalities, designed for scale, and they obviously use it on themselves. Google's a bit of a mystery, but they got all that data and they can do it cheaper than anybody else. None of these lanes are intersecting. So when you think about moving to this next stage and defending their business from attack, they're not happening. And again, this is where they get confidence to deploy more capital, build faster. And I think this is where, other members of your teams have been talking about this, like nuclear power. This is where power becomes a real problem.
Yeah.
And then we go running into sort of the unintended consequences of the chip ban, because there's some scary stuff around that. But actually, I think that you wanted to get an update on Intel. That probably fits better later on.
Yeah, there you go.
Yeah,
Okay.
I think it all points to this same point. It's like there's a boulevard of green lights right in front of most of these guys, and it's not the same boulevard. And I think that's,
yes,
they are going to continue to deploy capital very, very aggressively. Most of the GPU spend is down, right? But, there's other people buying GPUs like crazy. Like, the Mario Draghi plan to save Europe is about turning Germany into a massive GPU cluster, right? So
yeah,
there's all that's not going away. It's just the white space in front of Nvidia isn't like the white space elsewhere. I think that's the point we're trying to make.
Yeah, I think that makes sense. And it's just, it goes back to even our SMH conversation, team of winners, right? Like it's all kind of, they all kind of are happening simultaneously, but parallel and not perpendicular, and they're not intersecting, right? It's just optimization of the existing business and pouring gasoline on a fire already burning. It's not trying to put out other people's fires.
But then, hold on that point, and you raise a very good point. Again, we sound like we're selling our ETFs. That's not the point. The point of this is we have proximity, and therefore we have a voice, right? Or the right to a voice, whatever. Because I have a wow moment every week, right?
I hear
and
them.
I didn't
Yes,
see
I
it
know.
coming. I can't tell you with any kind of conviction how good the outcome is going to be for each individual player, right? So
sure,
diversifying it away, right, into a group of winners, like you said, to me, it's like the only way to go, right?
yeah,
I don't, we said it last time, like, take a swing at a single stock if you have 100% confidence, and that was the right way to go in Nvidia earlier on. I don't think I have any confidence to pick which one the ultimate winner is going forward. And, at the same time, there may be bumps in the road. So, the point,
or maybe not even being one winner, right? Like this is not the way it works. Yeah. So trying to pinpoint that is extremely difficult. Okay. So let's maybe pivot a little bit. I know I have some notes on GPUs, market share. Maybe it does tie to that actually, and Nvidia, and having that conversation about trying to pick the winner. So it's not necessarily a complete pivot, but understanding like what market share is. I know like maybe in our initial calls, or maybe it was just me, but like understanding that Nvidia, because of their GPUs and because of their specialized nature and how well it fit with AI, that maybe they were gobbling up all this market share. And then in my mind, in my framework early on, it was like, okay, well, they're winning right now, but there's going to be others that come in and gobble up some of their market share, right? Whether they continue to be the biggest winner, maybe that SIGs, but it seems as though market share maybe isn't the right word, or, what does it even mean, right? Like, I guess it doesn't really make sense at this point.
I'm going to be really honest with you. I haven't thought about market share framework for ages in AI time, like in the last couple of months. And I think you raised a really good point. I think
AI, that's right.
I think you can talk about market share in GPUs. I think that's okay, but that's the sort of foundational piece. But when you try and sort of cobble together an addressable market in order to have market share for, when you don't actually know what the market is going to be or how big it's going to be, It's crazy. I don't think, I think that whole thing is kind of out the window. And I think it's just where I think the framework that I find most useful now is like, let's ask questions, right? Where is the white space, right? Because wherever there's white space, it's going to be innovated into. And to some extent, you don't even see it. And I think it really is like playing a game of logic.
Well, I think that leads nicely as we're kind of coming towards the back half of this here, but reevaluating Nvidia. I know that was kind of the primary reason of the first two calls, and understanding what it meant, and understanding what Nvidia meant for our semiconductors, what it meant for, our funds, but the space as a whole. But single stock versus broad exposure, the framework there. Are benefits more going forward or less going forward, right? What does that look like? Because I think we've already kind of alluded to it here, is that, there's a lot of unknown, and maybe not to say that NVIDIA's, again, pounding the table that we love NVIDIA. This is not a question of whether or not NVIDIA is a great company, because I don't think that we think it is like Cisco or anything like that. But, maybe the upside seems limited, or there are more risks moving forward because of the unknown.
I mean, the risks are in expectations, right? So, if you sort of really pin somebody down who sort of knows what they're talking about, they think AI is NVIDIA, right? So you got to really kind of think about it through that lens. It's not, right? It's not. It just isn't, right? That would be the first point I make. The second point I'd make on NVIDIA is this, if you hear Jensen talk, outside of earnings calls and that kind of stuff, his basic philosophy, his positioning, right? He talks about being under a tree, right? He wants to position himself under a fruit tree that he believes will bear fruit, right? To the extent that when that tree bears fruit, everything drops, right? He's done that with GPUs, right? And to some extent, I think part of the reason why there wasn't a lot of excitement on the call yesterday is maybe he's bored of it. That's pure speculation. But to me, the next iteration that takes, NVIDIA to 5 trillion is robots, right? They will own robots. I'm pretty sure about that. But that's a while out. So the point we made in the first call and the last call, and by now it's got to be really upsetting and annoying our investors, because it is an infuriating situation, because it's got a tax component to it, is that I'm pretty sure that NVIDIA does not belong as a standalone position. That again, I'm totally prepared to accept that I might have got some expectations wrong. But again, it just points to the same point, that it should probably be inside a diversification piece, not sitting by itself. Because when you sort of step back the math, and if I could see the stock at 70, it's because earnings further out didn't quite get there. Expectations come down, and the multiple comes down a little bit more, right? So the multiple's already come down a lot. I worry that that's the market sniffing out that actually EPS forecast may be a little high. So that's my worry there. And certainly stock coming down would solve the tax problem. But I think if there's a possibility of getting there first, there are probably better ways to play it. NVIDIA made this happen. Without NVIDIA, none of this would have happened. The white space moment was back there, not ahead of it.
The white space is first right now for someone else.
Yeah, I think that's
not a lot.
The right way to think about it.
And maybe this is a good, okay, so this is a good pivot. We wanted to talk maybe about some other opportunities within, the fabless space specifically. So I know we had talked about ARM, AI for mobile moving out towards the edge, right? Because I am personally in the camp of that's where I think a lot of the white space is going to exist is in this edge computing and moving out and inference and starting to move out to the edge of the devices. And I think ARM is a pivotal player in that right now, providing the architecture for all, iPhone chips and Apple, right? So maybe you could just talk a little bit about ARM. It's not a company that has a lot of free float out there. SMHX does hold it inside of it, so that's nice. But it's kind of a maybe fly under the radar company that, people heard with SoftBank, but when they retook them public, but it's kind of been covert other than that. I think maybe the layman doesn't understand exactly what's happening over there and where the opportunity is.
Okay, let me start with a bit of a self-deprecating story, right? I don't know if you remember, as we were sort of building SMHX, I think you said to me, what about ARM? Because there was a liquidity issue, it was just after the IPO. And I said, nah, that's like That's a couple of years out. But it just dropped exactly into what we're now saying. It's here, right? When I did 6 months ago, it was like 2 to 3 years out. It's here, right?
Yeah.
And what's happened there is inside of a phone, there's a chipset, right? Apple build their own chipsets, which is one of the sort of geniuses of Apple. It's sort of a bit complicated, but let's leave that out. Most other guys use a chipset from either Qualcomm or from MediaTek, right? If you're Qualcomm MediaTek, every time you get like a transition from 3G to 4G to 5G, happy days, right? New houses, new cars, all the rest of that. But the rest of the time, it's awful, right? Because they just compete against each other. They brought forward AI on a chipset way sooner than I expected, right? So they built it, then they took it out to Samsung or whoever and just said, look, we got this. You want it? They was like, yeah, sure. And at the same time, these models shrunk and you can now get a localized mini version of whatever. That was what DeepSeek had as well, which was amazing, which can run locally. And now the innovation piece. So think about that as like an iPhone moment where nobody really knew what to do with this thing they got, like the iPhone. Then they saw the App Store and like it didn't look back. So that's here, right? And it's again come very quickly. And ARM v9 might improve its efficiency, its security. It does a lot of the stuff that iOS does on behalf of the smartphone operator. It's frightening if it rolls out wholesale, and it could lead to just a whole upgrade cycle for smartphones that you just hadn't really even considered. Yeah. So I think that's how I would think about it. I don't think again, it's a white space thing, and they're very, very well positioned.
What about cloud? We didn't touch on that, right? Cloud for mobile, and they're for ARM.
This sort of gets into kind of a slightly gray area, but since we're talking about semis, like HBM3, 12 stack high DRAM, it's a thing, and it's in very, very short supply right now. So in an ideal world, you could stack memory very quickly locally, but most of that HBM capacity, whether it's Hynix or Micron, is ending up inside Nvidia or Broadcom. So maybe that's a tough one to call, and I'm not sure that's where anyone necessarily needs to go in a hurry either.
Gotcha. So I guess maybe just for ARM, right, moving out to the edge, they're a key player. Not a lot's known about them. Angus thought I was wrong when I asked about it, so that's a good takeaway.
Totally wrong.
That's a little mental win for me. But all right, so wrap it up. I guess a couple more questions for you and things that we talk about regularly that I think are beneficial to the listeners. Intel has been, and we mentioned earlier, so I'm glad we waited till now, but they've been in the news cycle. There's a lot to probably unpack there if we really wanted to. Maybe we don't have to go fully down the rabbit hole, but maybe just giving like a wrap up of what's happening at Intel. Obviously a pivotal player in the foundation of semiconductors. Historically, they've lost their way as of late. What does that look like? What's going on there? Maybe giving a little synopsis would be useful.
I mean, I think we left last year with the narrow way. They've got some capability. They need a ton of money. And then they fired Pat Gelsinger. The board basically underwrote the part of the business that wasn't working. I mean, this is a disaster. Actually, for every other part of this call has been fun and interesting and comical. This is a dark place, I feel like. And so let's let me think about it. Okay, let's step through this really quickly. So the unintended consequences of the chip ban, right, are as follows. The US are forced to manufacture every single thing they do in Taiwan, right? Maybe Global Foundries a little, but call it Taiwan for the sake of argument. China is not allowed to build anything in Taiwan. Unintended consequence and kind of scary situation is the incentive, right? The incentive for China, right, to not do anything sort of kinetic or mean to TSMC is zero. The incentive not to is zero. In fact, it's probably the other way around, right? If they want to really cause trouble, TSMC hurts the US, doesn't hurt them, because we've created that situation. They have Huawei, they have Ascend chips, they've got DeepSeek, they're on their way. I mean, it's not great, but it's we have put them in a position where they're incentivized to develop locally. That's kind of a problem. So let's take that as point one. Point two is that something has to change, right? And something's got to change in a hurry, right? And I don't believe in this sort of kinetic situation in Taiwan, but it's a risk. And the consequences in this dimension are awful. So TSMC have been floated as like a consortium to buy the Intel foundry. I just don't see that as a solution. It may happen, but it's just not a solution for a couple of reasons. One, it doesn't solve the national security problem, right? It's still a foreign entity building on US soil. One, two, it's not like sort of taking on a shop in a mall, right? You don't just change the name above the door, right? So in a foundry, each foundry operator has different processes, different scale, sizes, engineering. They even use different chemicals to build from scratch. From an engineering perspective, it's not possible, right? You could rip and replace, but that's going to take forever, right? And it doesn't solve the problem up front. I would say there's a maybe there. To me, right, $200 billion is required, right? Which is awesome news for our friends in our SMH portfolio. That can only come from one person, in my opinion. That is the US government, right? I don't know how they would do it, but it could be raised locally, but then they'd have to indemnify the product that they're going to force people, Nvidia and co to buy from the Intel. I don't know. But the point I want to make is that needs to be solved, right? That needs to be solved in a hurry, right? And I think, you're starting to see that. We spoke about it last time. I wouldn't buy it as a standalone holding. It's inside SMH. And that's sort of what we sort of ended this conversation with last time, which is like, I would like to hold it inside SMH because if it goes up 5x, I'm going to do okay, right? I'm never going to buy it standalone because I have literally no idea what's going to happen. But that thing needs to be resolved, I think, pretty damn soon. So,
yeah, I mean, it very interesting. I mean, you can see during COVID, right? PPE was everywhere else. In China, we realized we didn't have anything, right? And now you kind of have the same situation with a much more important piece that everything is done in TSMC and it's abroad.
That COVID tightness around semiconductors, that wasn't even like the fancy stuff. That was like the lagging edge stuff that went into semiconductors and refrigerators. That apparently, over that period of whatever it was, 10 months annualized, cost the US economy 200 basis points, like 2 percentage points of GDP. Imagine the sort of tsunami, right? If it's unimaginable. So something needs to give around that.
Yeah. And I know we talked, kind of tangentially, we talked about, maybe they lift restrictions on China to allow them to just buy from TSMC. That would be, a potential opportunity that would maybe not force China's hand to develop it on their own and make opportunity.
Totally. The most controversial thing I'm going to say in this call is I think the most positive thing about the chip ban to support it staying in place is that it's already there, right? It's very. There's other stuff you could have done probably on the dimension of U.S. national security. So I don't know. We'll see how it pans out. It'll be interesting.
Okay, we'll end hopefully not on doom and gloom, but just biggest question, we get when we're on calls, whether it's with clients or whoever, is what keeps you up at night, right? I don't know why clients and advisors specifically, they love that question, but they always kind of want to know, I guess maybe you just want to know where the writing on the wall is if they're missing it. So I guess, what keeps you up at night and what's your response to that when you hear it from clients?
Okay. So let's put the balancing weight on the fact that I think this thing is moving faster, more monetizable
lot to be hopeful
than I'd ever thought.
Yeah.
On the other side of that brings forward to me, and now this is Angus speaking, not Van Eck. This is not a Van Eck view. If you're going to run the same analog, which I think you have to, then the deflation event is probably closer than we thought it was going to be. Now, if you think about deflation, there's also the stuff we're doing pretty aggressively in DC, pretty deflationary. There's a bit of a deflationary risk, well, more than a bit in Japan. So if you line up this thing moving the speed it is, you put it next to the sort of government stuff that may be moving quicker than expected, and Japan's are sort of ticking. If one of those were to go, there could be a deflationary event. It's one of those sort of 2008 type things where nothing is spared that uncomfortable period of dislocation. So that would not be good for semiconductor prices. It wouldn't be good for any prices. I think that's what would keep me up at night. I really have started to think more and more about it.
Everybody wants to know about a Six Sigma event upcoming. although it's an outstanding risk and there are risks across the board on different aspects of this, I think wholly and largely, I find it to be extremely lucky to be sitting here now, being able to talk about semiconductors and AI in a time where, it's like the emergence of the internet. We're seeing this new technology that is revolutionary. It is changing every aspect of everyone's lives, bringing forward, a lot of opportunity, creating, a lot of incentive for, creators or whoever it might be, right there across the board. There's opportunities, and some of the tools that I get sucked down a rabbit hole watching on YouTube of devs and AI building things and agents. It's just such an interesting, fun time to be, a part of it, and watching it happen around me, and being able to talk to you about it. So hopefully these calls every quarter, continue to be like they are, and it's more positives, and the landscape continues to shape and grow. But I'm just very, very grateful to be here in this time and watching it happen around me. And I think it's super interesting. And I think there's a lot of opportunity for investors and ourselves.
Yeah, and I mean, I would say to you, Nick, I've loved our ride together. And I would say it to anybody who's interested in investing, period, is like find a buddy to talk to all the time, right? Because, it's one of the most fun parts of investing is just like bouncing ideas, debating, right? And you and I, way more
Just
than I
like
thought we
Zoom.
would.
Ping, 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 ping.
But yeah, it's been
Great.
fun, man. Even though you're in Florida.
Friends in unlikely places, right? So, well, thank you guys for joining. We appreciate it. We will try to be back next quarter, hopefully with some additional good information for everybody. But as always, thank you, and be sure to comment, and we'll try to get back to anybody with additional questions or whatever that might look like.
Love feedback. Like, tell us, dogpile us if you think we're wrong. We love to be challenged.
Dogpile Angus if you think we're wrong. Perfect. Well, thank you guys. We appreciate it.